Hello and welcome to today's tutorial brought to you by To The Tick, and today's topic is the bearish neutral rectangle. Now, rectangles are one of the few price patterns in technical analysis that can be considered bullish, bearish, or neutral. They can be seen in trend continuation setups, they can be seen in sideways, consolidation, and they can also be setups for reversals. So basically, all traders are going to see a lot of rectangles in any instrument or time frame. Today, we're going to focus on recognizing the neutral rectangle in a bearish continuation setup. Now, this image represents exactly that. It's important to note that it comes in two parts, this price pattern. It is considered bullish or bearish based off the direction of the pole. You notice the pole base is at the top, the pole tip is the bottom, and basically that means it is in a bearish consideration pointing straight down. Part one. Part two is the rectangle itself, and it is totally neutral unless it's attached to that pole to be defining trend direction. So that's the first rule. To be able to look for a bearish neutral rectangle as a potential trend continuation pattern for the bears, you need to have the pole. It is not a continuation pattern without the pole. So there's your rule. Now let's watch this unfold bar by bar, because we don't get to watch things in perfect little images, and it's important to note that the bears have been hammering on this wall of support up here, and they're looking and we're looking for them to finally get enough juice to break those bulls support and get through that line, hold that line, and we're looking for that new breakdown. Now, as traders, we're watching the formation of that pole. I cannot stress enough, the base is at the top, the pole measurement comes down, the tip comes down to that swing low, and again, I cannot stress enough that the pole itself, the deeper, harder, more volatility, how fast it happens, that action that creates the pole, the better. It will always have some tilt towards price. You see how it's tilted towards price. Now, the swing low tip coincides with this swing low effort, and even if all they're doing is just taking some of their profits out, this is where the decline stopped. This is now your swing low. We get an effort on a swing high, we get another effort on a swing low, another effort on a swing high, and again, the swing high to swing low parameters are there, and so therefore now we have a definition of our immediate support on the bottom and resistance on the top. So let's bring our little image back over here, and we'll say, okay, part one of our price pattern is the pole. Not only do we have the pole, we've watched that breakdown, we've watched that volume and volatility, the bears totally in control, stomping down that hill, and now we have completed the pole, and we've taken our first swing low, swing high, pause. So let's move our rectangle over here, and I hope the first thing that you notice is that it's not the same shape. It's not the same shape that we looked at in what we've got drawn. It doesn't matter. It is about the shape being in the same structure, and what that is parallel or near parallel structure is what we're looking for. And again, we're talking neutral rectangle. Structure is parallel or near parallel in your space between your support and your resistance in the immediate picture. Now, the swing low that created the pole tip and basically holding our line in the sand down here. With these, we now have a completed pattern for part one. We're going to continue to work on part two, and this part two should be a consolidation. Should be a what's called take a breather. The bears have expended so much energy in order to drop down like this, and we want to see them take a pause. We want this to be both a consolidation in volume and in price, meaning that we want them to stay in this range-bound environment outlined by our picture. We want to see those more or less equal efforts on both resistance and on support while we're in this period of consolidation. But again, a neutral rectangle itself indicates market indecision. It's an equal balance of buyers and sellers, or put another way, supply and demand is equal. So how do we get an edge? Well, the market is vacillating between these two parameters, and as they continue to do that, you're going to continue to watch them kind of fill in the spacing here between these definitions of support and resistance. And eventually what you're going to see is that you actually have what I like to call a muddy trench. The muddy trench is represented by the 50-50 line between your developed support and resistance of your rectangle. That means that the bears are in control above that line, the bulls in control under that line. So while we're watching them back and forth in here, aggressive traders are welcome to take short trades off the upper resistance. Again, aggressive traders. The recommendation is wait for a swing or two so that you're sure you've developed a real resistance there on the top, and you can use a very tight stop immediately above. The whole idea is, are the bears in control or aren't they? As you approach that midline, that 50-50, use that as an incremental value in price there to tell you whether the swing's going to go on with it. As it approaches that midline, if they go on through it, then you're looking for your lower support line. So aggressive traders potentially, especially since rectangles can take quite some time, but as long as they still honor the structure, aggressive traders may have several trades during this picture. If you get these extra trades out of a rectangle, especially a big one, just constantly be updating your risk to reward parameters, because realize that the longer it goes on, the more momentum you've lost. The more impulse move you've lost out of that first move. And the more neutral it stays, and the longer it does that, the more momentum you've lost. Okay? So it's very important. We would really like this phase to be short. We don't get to control how long we spend in here. But what we do get to do is we now get to set some targets based off of our price pattern. Our structure of our price pattern, our two-part structure. We get to measure the swing high to swing low, and if we get the breakdown, we're going to add the distance of that swing high to low, that measured move is what it's called here, these gray dashed lines, to the breakdown line for a target lower. So we're going to subtract that obviously from the price because we're looking for that short from that breakdown number. Now that's the most conservative thing to do, is to wait for that breakdown and or even the confirmation of that breakdown before you enter a trade. The more aggressive trader looking for this to be a big bearish continuation pattern is going to measure their pole value base to tip and deduct that from the 50-50 line, where the bears maintain that upper control on that 50-50 line, and you're going to subtract that target from the 50-50 line looking for a full repeat of your pole. Now do you understand why the pole is so important, right? If we get to target that measured move, if we understand what creates the poles and we can see them, we get to see maybe what's coming next. So again, as we continue to watch this pattern unfold, you're going to have things like them doing a little pokey thing here on their resistance line up there. Maybe it's right before they totally break down. Happens a lot. Watch them break that support line. Can they hold it? Did they pop back inside? And again, your 50-50 line becomes more important as you aggressively move that stop placement down to be able to handle these further moves. And again, we'd like for this pattern to be brief. Obviously, the definition of brief is very relevant to your picture, but this is the activity that we're looking for our bearish neutral rectangle pattern to actually turn into a beautiful bearish continuation pattern. So part one, the pole, most important. Part two is your rectangle, and then that bearish continuation is looking for what's coming next. In summation, it's important to understand that the pole is the most important characteristic of this price pattern. You want that repeat in thrusting and volume and price. You want that strong volatility, and the deeper and harder you get it in that very first move that creates your pole, that really establishes your potential for what might come next. And that's what you're looking to try to trade, what might come next. So understanding that pole is the most important part of the pattern. You want to see volume, strong, and surging with the bears firmly in control. Then part two is that consolidation. consolidation, and it is that neutral rectangle. And we want this to really be a pause, but we don't get to control how long it is. What we're looking for is that structure of that equal highs and equal lows, more or less. That's parallel support and resistance lines. We want that structure to stay firm. And then we're looking for a surge in both volume and price again out of the bears, and we're going to be able to see that 50-50. We want to see the push there and or that new breakdown. That's where you want to see them stepping in with some volume and really taking control again. And if so, we get to take that target measured move using our 50-50 line, subtract our full pull value for the bigger trade, the continuation trade, or take the more conservative avenue and take that breakdown price and subtract your swing high, swing low inside your rectangle pattern. Use your rectangle pattern. Now on our website at tothetick.com, I always try to offer you some screenshots, the text, and these videos all put together for you. And you'll notice this is a real pretty pattern. We had a breakdown in the top. There's the pole measurement. The pole measurement gave us this really nice neutral rectangle, and it's a neutral rectangle with a bearish pole in your background. Come in and I try to mark the volume considerations for you to come and look at these. What do you want to look for in that pause? How do you want to see the volume step in? And again, notice they'll do those little pokey things. Just like I drew in that example, you'll get these, and this is a very classic looking picture, and this is a real world chart. So come in and review. I have lots of great educational pieces at tothetick.com at edu. Come subscribe and join us. Thank you and goodbye.